Apple, Herbalife, Best Buy, who's in, who's out? Let's talk to Sam Forgione, he's Reuters correspondent. All right, Sam, 13F filings here, sorry, hedge funds. Apple, a lot of big hedge funds dumping, some of them entirely out of the stock in the fourth quarter.
Right. Apple obviously was one of the biggest stocks of the quarter. We saw it fall 35% so far this year. The stock had a great 2011, but we saw 8 of the top hedge funds really exit the stock in this quarter. And a few were still bulls in the stock. We saw David Einhorn, one of the top shareholders, owns 1.3 million shares of Apple. We saw him up his shares to 212.
Despite his lawsuit, right?
Exactly. Despite his lawsuit, he upped the shares by 212,000. And we also saw a few others, George Soros and a few others. There was David Tepper of Appaloosa Management that increased their stake in Apple. So we still have some bulls, even though there are some bearish.
Right. The big ones getting out. Leon Cooperman, of course, dumped out entirely. Eric Mindich out entirely. I guess, these guys were in early, and they're not waiting for the next big innovation, I guess, to make their money. Right. Maybe some shareholders aren't happy, but their clients are pretty happy, right?
Right. I mean, Cooperman, he was an early filer. He showed that he dumped his entire stake of around 266,000 shares in Apple. Barry Rosenstein of Jana Partners, another activist hedge fund, he also dumped his stake, and they both got into Apple in 2010 and really took a lot of profits from the stock. They got in it early when it was trading lower than it is now.
So they were dumping while the stock was falling and actually caused the stock to fall at the same time, right? Yeah.
Right, yeah.
All right, let's move on to retail here. Best Buy, we've also got Eden Park Capital, which actually went into Best Buy because Best Buy stock, with all the talk about going private and everything, has been up. Amazon Tiger Global, run by Chase Coleman, more than doubled its shares there, right? Mm-hmm. And Coors, which has kind of been on a tear, Tiger Consumer got out, actually, of Coors. It cut its shares by more than half.
Right. Tiger Consumer dropped. That's one of the Tiger Cubs. It's named, after the Tiger Management, which was started by Julian Robertson, who seeded the capital for those funds. And he got out of Michael Kors Holdings, which was an interesting move.
We're looking at the share prices today, or where they're going. Kors is actually up 2.5%.
Right, and Eden Park, getting into Best Buy right at the right time. I mean, the stock was up 37% in January, so that was a very smart move on the part of Eric Mindich, who runs Eden Park.
Right. And also Herbalife on everybody's mouths today, particularly, of course, Icon and Ackman. The stock is up 12% today because, of course, Icon saying that he now owns nearly 13% of Herbalife.
Correct. Yes. I mean, there was speculation that Icon wasn't Herbalife. He had this big feud with Bill Ackman and is shorting the stock. They had that feud on CNBC late in January, and there was talk that he would have a big stake, and he did reveal that after hours trading. That he took a 14 million share stake, which is 13% of the company, in Herbalife. So waiting to see how that turns out.
We've got a soundbite here, too, from Rob Searand, who's on this show a lot, talking to Jeff Goldfarb, both from Reuters Breaking Views here, about Herbalife and the Icon-Ackman spat, and just, about where Herbalife stands on all this. Funny little company to be caught in the middle of all of this, so let's take a listen.
Is he coming into it because he actually thinks this stock is undervalued? Maybe not, because he's the long feud with Bill Ackman, and
it's a revenge play.
Yeah, it could be a revenge play. And for Bill Ackman, why did Bill Ackman get involved? Well, there's questions. Did he go in late in the year to juice up his returns on the fund?
That's the accusations have been made by Icon. Right.
And so it becomes because
Herbalife kind of sits in the middle of this massive storm of financial
and because it can be whatever people want it to be. People make it whatever they want it to be, So if Icon wants to get back at Ackman, this is a very nice vehicle to do so.
What do you think? Making Herbalife what they want it to be as a vehicle to get back at each other? What do you think?
I think that's there's something to that. Maybe I think that Ackman is very passionate about his 20 million share short. Icon is also very passionate. He said on CNBC that he didn't like the way that Bill Ackman went about his short, very publicly presenting to a room of people. So it could just be some very old wounds that they're taking out on each other.
All right. Well, Herbalife's, again, stock up 12% today. Sam, thank you so much. I'm going to move now to the hot spot, where I'm joined by Greg Roumeliotis. And Greg, we're going to talk today, tease out a little bit more this Heinz deal with Warren Buffett, and then talk about we won't necessarily be seeing the go-go days of all these mergers. But first, this Heinz deal, Warren Buffett, he has a way of just sort of targeting companies that he thinks are good American companies and not overpaying here. He's got more cash on hand. What do you think? Is somebody else going to make a higher bid on this? Is he going to move with his other cash into Campbell's or somebody else?
It's hard to see him, it's hard to see anyone stepping in and making kind of like a higher bid.
Yeah.
So the company was already trading well compared to its peers. He's offering a 90% premium. We're polling investors today to see what shareholders think, but I think it's probably a deal that will go through. It's it's a famous bet on America again. He has said he likes elephants, he likes big acquisitions, and he has.
And everybody likes ketchup.
Everybody likes ketchup.
Ketchup's not going away.
Everybody likes ketchup. So that's basically a deal that will close for him and will probably pay off for him as well.
So tease out this piece that you're writing today about how we necessarily, because there's cheap debt out there, don't expect that more of these private equity firms are going to be getting into these really big deals. They really want to make.
Well, exactly. It's all about how do you fund those deals. So Heinz is a deal in terms of enterprise value, equity and debt is like $28 billion, and Buffett is funding that with $12 to $13 billion in cash.
Right.
Interestingly, he has partnered with 3G Capital, a New York-based investment firm backed by a Brazilian billionaire that has both private equity and hedge funds.
Yeah.
But the whole deal is not very highly leveraged. Ketchup is not going to be a highly leveraged company. And when it comes to the large leverage buyouts that private equity likes to do, they like to use a lot of debt. Right. And the math doesn't always work. Now, we've talked on this show before about Dell, about some other big recent deals recently, but the point that buyout kings are making is that Dell is exceptional in that it has so much cash already. It has Michael Dell, the founder, who's trying to basically take over the company, rolling over his equity.
So it's about making smart deals, is what you're saying, and knowing that you can manage these companies. Yeah.
Absolutely. So it's not just about financial engineering now. It's about going in, having a really good idea. They still want to buy companies on the cheap. They still look at comparative valuations, but they want to have as much upside as possible. They don't want to be betting that everything goes right.
All right. Greg, thank you so much from Eliatis. I'm just going to very quickly mention that Burger King is up 3% today because they had very strong earnings, profit beat, and the same-store sales are up, and we're going to wrap it up there. I'm Lisa Bernhard. This is Trading at Noon. Remember to follow us on Twitter at Reuters Insider and get more great videos at Reuters.com/ReutersTV. See you next week.